Jonathan, it's been an exceptionally difficult, challenging year in the business world for a multitude of sectors. But in regard to mergers and acquisitions, how has the last 12 months been looking from your perspective?
Well, a very unusual period. I mean, we've never been through this kind of lockdown before. And at the beginning of that period, when we're in sort of April, May time in 2020, we thought there was going to be a dramatic effect on the economy. As it's turned out, I think business has been remarkably robust, and we found that the M&A deals have held up very strongly. The initial period, I think from May to June 2020, there was a noticeable slowdown, but we did start doing deals again then. We had deals closing in June and in August. And once we got into the period from summer through to Christmas, it was a much more normal deal market.
So how are you managing deals, I assume, over Zoom?
Yeah, certainly that initial period, and when everyone was out of their offices, all the meetings have been on Zoom or by mobile. But we actually found that we had more face-to-face meetings with clients as a result. So generally we had the buyers team, we had corporate finance advisors, we had tax advisors, and we had the clients, and we were all on Zoom calls, so we could all join together. Or I could catch up with the clients by Zoom afterwards and have a chat about how it went, how they felt. So in a lot of ways, I think we had more contact with our clients than we would do in a traditional situation.
And where do you see the deal market over the next 12 to 18 months?
Well, I think the pattern over the last 12 months was bigger corporate buyers and some overseas companies buying into the UK, and a lot of private equity buyers, a lot of private equity investors going into companies. So I think that will be the pattern that's continuing. And there are certainly some sectors of the economy that have been really buoyed by what's happened over the last year, 18 months. So anyone in logistics, anyone in the healthcare sector, any products that are being delivered to homes, those sort of markets have been really busy, and including some parts of the leisure market that you might not have expected to be busy. So we sold a bicycle business, people who make and design bikes for the leisure market, sold to a private equity buyer. So I think there's surprising parts of the market that have been busy, and as long as businesses are growing, generating cash, and they've got good prospects of growth, I think deals will carry on.
So if I'm an owner business in that situation, I've got great prospects for growth. What's your advice? What's your advice for how to successfully bring that business to market?
Well, I think the key thing really, and perhaps I would say this, but it's preparation and thought ahead of the deal. What you don't want to do is wait until you get an offer and then start thinking about whether you want to sell the business or whether you want to take investment, because psychologically, you're not really prepared for it, and you've got no idea whether it's the right offer. So I would say start talking to either your lawyer or accountant or corporate finance advisor, and start getting a feel for what type of deals are likely in your market and what type of price you might attract. And prices vary according to which business sector you're in, and generally they're based on a multiple of profits that your business generates, and that multiple can be anywhere between 3 and at the high end 15, 16 times, but that varies very much according to what sector you're in.
So obviously, I suppose those initial conversations just help set expectations, realistic expectations.
Yeah, and I think the other thing you can do is work out what are the key strengths for your business. So what are the aspects of your business which will generate a higher price? So for example, if you're a business that has one super customer, maybe it's M&S, or a very big customer that 60-70% of your business goes through, that's a high risk for a buyer. So what we would recommend is that before you come to market, you broaden your customer base, so it's less risky. If if that big customer goes, the business suddenly is on the slide. You want a broader customer base. There might be aspects of the intellectual property of the business that you want to protect. There might be things to do to keep key staff in the business. So there are different things that will affect the value of each business, and some preparation just means you can be prepared and make sure you get the best price you can.
And just finally, from making the first telephone call to yourself to actually signing on the dotted line, I've sold, to selling the business, how long might that take?
Generally, deals are between 3 and 6 months. The normal deal timetable that most advisors will tell you would be about 3 months from receiving an offer to closing the deal. And that's because in the first month or two, you're doing what's called diligence. You're answering the purchaser's questions about your business and getting a lot of information shared. And then you need a month to 6 weeks to negotiate the deal and close it.